Yellow Tunnel. My name is Carpel. I'm CEO and founder of Yellow Tunnel, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, talk about the current pullback, and see if there's any opportunities in the market. For those of you who are new, welcome. Paul, anyone else first? Let's see. Wanda, Bill, or Alan, Dan? Not sure if this is your first event or not. All right, perfect. Paul, Bill, I'm glad you guys can make it. Thank you very much. So for those of you who are new, my background is in technology. So I worked as a CTO and executive for several startups here in Chicago. In broker, some of them were broker dealer like Options Express. Some of them were hedge funds like Pick 6. So have a lot of experience in trading and building technology for self-directed investors. Started TradeSpoon and Yellow Tunnel. TradeSpoon about 12 years ago. Yellow Tunnel, it's been 5 years. And been managing my own money since Options Express went public and kind of decided to manage my own money. So I've been doing that for over 20 years. Need to update that slide, and mentoring and teaching subscribers how to trade stock and options. And we have Keith from Options Hotline who joined, who brings a lot of experience in market making, working at hedge funds, and vast knowledge of options trading. So that's the team. We have a live trading room between Keith and I. We share opening bell and closing bell, and this is something you can also participate in. In terms of disclosures, I'm going to go through specific trade ideas, how to hedge your portfolio, how to take advantage of the current market volatility. So if this is the first time you see the slides, I encourage you to visit optionsclearing.com to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. You can always pause the screen if you need more time to read the disclosures. All right, before we jump into trading psychology, let's talk about current market conditions. So if you can see, if you look at the spiders or SPX, basically at this point we are revisiting last week low, right, where the Jackson Hole meeting took place. Market did pull back. After Powell indicated that he's more receptive to change the policy and potentially lower interest rate, market made new highs, and now that everybody is back from vacation and after Labor Day weekend, volume is picking up. We're revisiting the same level. On spiders, if you look at the QQQ, we're right at the 50-day moving average, right at the Jackson Hole lows, and then right at slightly above of the Liberation Day Part 2, August 1st, when the tariffs took into effect on countries like Canada, and now it's India. We're QQQ, we're not that far away, right? Maybe 1% from the August lows. So very important level as we approach in the ADP data on Thursday, right, and unemployment data on Friday. One of the concerns that Paul mentioned during Jackson Hole is that employment market continues to cool off and potentially, can have a negative effect on the economy. So he's more concentrated now. The Fed is more concentrated on state of the employment, economy, and less so on fears of recurrent inflation or persistent inflation. So that's the current setup. If you look at let's look at some of the interest rates. So let's look at the interest rate first. Right, so you can see 10-year yield is right at the 430. If you were in live trading room, you can see interest rates continue to drift lower, right? And you can have this descending triangle. Today they did rally on the, on inflation data, right? The fear that some of the inflation data might not have higher courts approval, right? And from oversold conditions. So no new signal, is still trading in the range. You can see dollar continues to be oversold and also sitting at the key support level. We did have a high yield drop, so high yield had a sharp pullback below 50-day moving average. QQQ, we talked about QQQ and semiconductors already down. Small caps were one of the beneficiaries of the lower interest rate, right? Interest sensitive sector like regional banks, small caps, biotech. Did pull back, but still outperforming the QQQ and even spiders, right? A sharp rally in silver and gold. Silver is breaking out. Gold is making new highs and breaking out. You can see a sharp pullback again in Germany and Europe in general. The only bright spot today, I would say Bitcoin, right? Bitcoin actually led the pullback. They were highly correlated to the high beta trade, but today it's up, right? So that could be an indication that maybe this is the start of the bottoming process. But Bitcoin is up from oversold conditions, but still below 50-day moving average. Still a pretty bearish price pattern. So if you look at some of the services on yellow tunnel, right, looking at the current portfolio, this is the model, right, that runs every day. For aggressive power trader, it runs every day. For the rest, for weekly power trader, it runs on Sunday, because these are the longer term predictions, and aggressive power trader are short term predictions. Basically saying that spiders a little bit ahead of itself, right? That 1 month we could see 643 and even 630 level on spiders, but we were already making new highs around 645, 640, 645 level, 46 level. So my model basically says that even though short-term market can continue going higher, longer term it's already overbought and potentially can reach 600 or 631 level. Let me zoom in. 631, and then it shows you different stocks that are, model C's trading an uptrend, like Zoom. I mean, it's down today, but you can see outperforming the market. But that's an idea that gets generated on daily basis, and you can look at the history. So this is our model, basically saying that the market is overbought. And then if we look at the positioning data, if we look at the supply and demand for options contract and futures contract, we can see where are people positioned, right? So we were at 6,400, right? That's the very familiar level that we talked about it at length. Right? So what used to be a support is now a resistance, right? We're trading right at the 6,378 level. And then the next level of support is last week low, which is today's low. And after that, the largest position is 6,300. So this somewhere between 6,300 and 6,350 is your support number one. And then the breakout from the previous high is around 6,200 and 6,250, right? And this matches 50 days moving average, right? This is a 50-day moving average. In terms of positioning, right? This is supply and demand for option contract that the strike price is 6,300. And then the next level of support is 6,200 to 6,250. So that would be support number two. So if you look at the data, so that's key support. So then the question is, what's next, right? Where's the market going next? So if I just look, instead of looking at all expiration, let's just look at the September expiration. We have September expiration and October expiration. Let's look at these two data points. You can see in terms of hedging, not a lot of hedges occurring in October, very low volume. You can see only $14 billion of positioning, right, where people buy puts and calls in October. So people are kind of caught off guard for the months of October. September, I mean, it's growing. It's about 90 billion now, right? Now a little bit more than $90 billion of contracts in September 19. And again, the highest concentration, what's called put wall, is at 6,400. right? And the gamma flip point is 643. So we're trading right below gamma flip point, the put wall, and the red zone, negative gamma. We're trading in the negative gamma area, and that usually could lead to the accelerated move to the downside, right? It could lead to the accelerated move to the downside, right? And if we continue to stay below this key important level, 6,400. So one standard deviation, we're revisiting the lows, right? So what's going to happen going into next earnings season, right? Next earnings season starts middle of October, right? So this is demand and supply for September and October contracts. So one scenario, right? One scenario based on one standard deviation, we're making new highs, right? And we trading at 6,500, maybe 6,550. Not a lot of contracts here. The next overhead resistance, the R2, is at 6,500, right? That's the after the current resistance of 6,400. But one scenario where one standard deviation moved to the right side, right? That's scenario number one. By end of September, maybe end of October. That means that, unemployment is still healthy, right? People have jobs, unemployment rate is low. CPI inflation data is still contained and pointing to the downside. And the earnings are better than expected, right? Most companies beat the expectations. Instead of single-digit growth, most companies reported double-digit growth. So we have scenario number one, and these are just short-term seasonality impact from people coming back from vacation. So that's scenario number one. Scenario number two is that we're trading in the range, right? Maybe making new highs around 6,500 or revisiting 6,400, and revisiting 6,200. Right, so that's kind of one standard deviation move. So that's scenario number two, right? Just like last couple of weeks, we had better than expected CPI data, market rallied, and worse than expected PPI data, indicating elevated risk of inflation and market pullback, right? Maybe employment data is better in September, worse in July, right? But for every good news, there is a bad news. We don't really have any earnings until end of October from seasonality. It's kind of a weak. So we have scenario number two. We're trading between, call it 6,100, 6,200, all the way to 6,500, right? This one standard deviation. And that's the usual approach to trading. The approach to trading is that you don't really have 100% certainty whether the market is going to go up, by end of September, or it's going to go down. But you have a distribution of possible outcomes, right? Kind of a one standard deviation move. So 67% of the time, 70% of the time, roughly, market should be trading between one standard deviation move, somewhere between 6,200 and 6,500. There are exceptions, right? There are outliers, right? So this is one sigma move. If you go back to your statistics class, back in high school or college, and two sigma move, right? And 5-10% of the time you have sharper than expected moves, usually on some kind of a new information, some kind of news. Maybe unemployment jumps higher next, on Friday or Thursday, GDP data is weak. Maybe the following week CPI data, is worse than expected. Maybe Powell decides not to cut interest rates due to new information from the unemployment data and CPI data, right? So, so then scenario number three, right? Maybe revisiting 6,000 level. So you look at these possible outcomes. Why is this, I call it future rehearsal exercise. Very common when you deal with uncertainty, whether you're a doctor or a lawyer or special forces or trading, right? There's a level of uncertainty, a level of surprise. So everybody's doing these positive and negative rehearsal exercises so you determine position size. Because in trading, one of the most important key skill is to determine correct position size. And you can't really determine position size if you don't go through these exercises. I'm going for more momentum swing trading, right, where you hold in position for a couple of weeks, maybe a month or two, right? So I'm talking about end of September, end of October. But you can do the same exercise if you're doing day trading, right? There's 0 day still expiration options. I can pull up the contracts that expires tomorrow, day after tomorrow, and go through the same exercise. I mean, you can look at the leaps, right? 6 months, 9 months, 12 months, and go through the same exercise. Why this exercise is important? Because I do want to know what should be my position size, right? So let's go through this exercise. How many of you say one? We're going to revisit new highs and make new highs, right? Because inflation is contained, people have jobs, and economy is strong. So that's scenario number one. Type in one inside of the questions and answer. If you think we're just going to be, we might revisit 64, 6,500. We could also drop below 50-day moving average, 62, 6,300. Scenario number two, just, choppy market. That's what usually September is one of the worst months, right, from seasonality point of view. So we're trading scenario number two. Scenario number three, maybe CPI and PPI is worse than expected again. Maybe employment jumps higher, right? And everyone is very sensitive to this interest rate sensitive information that drives the interest rates. So scenario number three. Bill, Wanda, Sue, Dr. Simon, Paul, Peter, Tom, Henry, George, Edward, Don, Dan. Any idea? Scenario number one, scenario number two, scenario number three. Give people a little bit more time. All right, most of you said two. All right, most of you said two. Some of you didn't say anything. I'm going to go with the two again. One of the reasons I think September is pretty well positioned. We already revisited the lows. Assuming we don't have a large jump in unemployment, assuming that inflation, we don't have a rise in inflation data, that economic data is trending in the same direction, right? Employment, yeah, it's cooling off, but still, most people have jobs. Inflation data is also trading in the right direction, right? Continue to go in lower. So assuming that these trends continue, don't have abrupt changes, right? Or tariffs, right? New tariffs maybe on China, right? We impose tariffs on China, or instead of 30%, we impose 50% on Canada. Assuming that those news will not arrive, then I think scenario number two is something I would consider. Right, that's how I would trade in position size. So that means I need to have long position. That means I need to have short position. So again, how do we help on yellow tunnel? We do have aggressive power trader. This models, it's an AI model that we build models that trains on the earnings data, trains on the price movements, price patterns, and makes predictions. So aggressive power trader, you makes prediction every day, right? So today for spiders, it basically says at 640, consider going long, 646, consider going short. 636 means we're oversold, but it also means that 640 is now your support. If you want to analyze your own stock, like NVIDIA is a very popular stock, we have this AI analysis. You can go in, type in NVIDIA, and also gives you prediction, right? Predicted 173, 182 for today. These are buy-sell signals that are predicted for current section that you can use. Well, we're already at 168, right? NVIDIA is one of the stocks that leading the market to the downside. High beta stocks that didn't have great earnings. NVIDIA last week didn't have, nothing wrong with the earnings, but still some cautious guidelines, future guidelines, and you can see NVIDIA pull back. And you can tell even before NVIDIA earnings, you can see model predicted actually to reach 140 level on NVIDIA. So you can look at these long-term predictions that our AI model point basically says, you know what, maybe NVIDIA is what? I think it's below 50-day moving average. Maybe model is right. Maybe, we broke through the August low, we broke through the, September lows. Maybe, it makes sense to hedge, right? Assuming that this level doesn't hold today, tomorrow, it's something you can hedge. So that's aggressive power trading, right? You have AI analysis that you can use our AI analysis. You have signals. You can look at the history. What were the signals, last week on daily basis? And we also have a chat, right? AI bot, right? You can leave your email and phone number. You can ask any question. Same thing. We have bots that build to train on customer service, on customer service, FAQ, website. So if you have any questions about yellow tunnel of performance or signals or how to create an option spread, it will answer you those questions. So I encourage you to review that AI bot as well. Any questions on AI bot, our AI model for aggressive short-term trading? And again, the model runs each day, makes a prediction. The idea is, especially if you're new to our services or you're new to trading, the most important in the live trading room, we talked about position size and drawdown. Right? If you're new, if you have I propose to have 4 active positions and not to risk more than 2.5% of your account value per position. So this way, your drawdown is 10%. Right, and if you're new and you have a 10% drawdown, I think that's fine. If you're experienced trader, usually it's somewhere between 15 to 20% drawdown. So you might have 8 positions, right, at 2.5%, or maybe you're more aggressive, 6 position at 3%, but something along those lines. But whether you're new to trading or you're experienced trader, anything beyond 20% drawdown, this is where you get emotional, right? Hence the name Yellow Tunnel. The idea is trading psychology. We cover a lot of material on trading psychology. You can find them, in our blog, in our recorded webinars. It's hard to recover from any drawdown beyond 20%. This is where most of us trade more on emotions. So that's aggressive power trades, some of the guidelines for these signals. We also have weekly power trader. These are longer term model that makes prediction for a longer period of time. It's published every Sunday. For this week, it sees Broadcom and still in trend, Chevron, right? Chevron, Taiwan, right? Those are the models that sees in the uptrend, right? You can look at EWT, China in general, and Taiwan is outperforming the market. EHT is also. EWT, what was the other one? Sorry. EWH. EWH, right? EWH is doing better. Hong Kong is doing better than Taiwan. We had, what was the other one? Chevron. So it looks like Chevron and energy, at least today, outperforming, right? You can continue see the trend to the upside. And Broadcom. Broadcom has earnings, so you have to be careful, but this is something you can also take advantage. And Broadcom, today it's doing better than SPX, better than QQQ and semiconductors. Any questions on weekly power trader? And dynamic power trader is actually where I manage positions and orders. So it's synchronized with the broker dealer, right? If I place a trade, we have AGT, right? One of the broker dealers where you can actually, execute some of the auto execute some of yellow tunnel services and other services we have. But if you click on that link, right, and I can log into my account, or you can sign up, right? If you log in, sign up an account, the advantage is that when I place trade in my broker dealer, it automatically gets synchronized, right? It gets synchronized with my orders and positions, right? And you can actually see my orders, my positions. So today, you can see I sold put spread, right? I think market is oversold, so I sold Spider's put spread. Some of these trades are options, right? On Friday, I sold call spreads, right? Spider's call spreads. So then you can see short-term aggressive trading. You can see more of a longer-term trades. Today, market is oversold, so I went and bought Morgan Stanley call spread. And I also hedge positions. So if you look at my positions, I was concerned about the pullback, right? Concerned about the pullback in the market. So I do have pretty wide QQQ put spread, 550, 530 put spread, which is acting as a hedge for my portfolio. So the idea is to be long and short the market at the same time. If you're concerned that the 50-day moving average is not going to hold, or if unemployment is going to tick up and you want to hedge your portfolio or go short in your portfolio, then you also, we give an example of, you can do it with a inverse ETF, such as PSQ or SH, or in this example, it would be QQQ put spread. And again, we give you through specific setup. So whether I place a trade on the Vanguard platform, right? Like, yeah, I can go trade option and actually repeat that trade, right, in QQQ, and create a put spread, go into October, right? If you don't have, an account, or you can go to your own broker dealer where you have, and then repeat the same trade. So in here, I would have 550, 530, right? So 550, 530 spread. I can click on 550. So 550 buy 550 put spread, and 550 put and sell 530, right? And right now it's trading at $4, right? Right now it's trading at $4. So you can still do that trade if you're concerned about, see from seasonality point of view, that September is going to be choppy months, or if you're concerned that employment could actually have a leg down on Friday or Thursday, then that would be the setup in this trade. And again, if you're interested, you can go here, yellow tunnel. Just AGT, if you type in yellow tunnel, I can drop that link, yellowtunnel.com, AGT, right? And you can, I'll put that link here. But you don't have to have this, if you have your own broker dealer or different broker dealer, then you would just have to go in and not sure why I cannot type it. Then you can you basically repeat the same trades. You would go to Dynamic Power Trader, look at the position, look at the orders, right, and repeat the same trade, right? Shows you long QQQ, right, 550, and then short negative 530. Any questions so far on how to hedge your portfolio or where the market is? The problem is the right scenario. Again, no, I mean, a lot of it, it's not predetermined, right? There is a certain uncertainty. You can see that the market is weak, right? You can argue that, most of the indicators that I look for point that it's kind of a broad risk-off environment, right? But the positive news is that from the yield perspective, there's no new signal, right? Business as usual when it comes to 10-year yield, when it comes to 2-year yield, I don't see any new signals. VIX is elevated, right? We had a 19 print. Spiders is also in QQQ are retesting 50-day moving average. Semiconductors are actually below 50-day moving average, right? Small caps are also pulling back. So you do have a broad-based pullback. And you can see kind of a traditional safety asset classes where people are feared of the market condition. Then you see gold breaking out and silver. So that's all bearish argument. I mean, the bullish argument today, I think, again, yield is not new low or is not trading out of range, which I think is the most important. And Bitcoin is also not selling off, right? Kind of looks like it hasn't made new low in the past 5 sessions. So you usually don't call the bottom or the top, but you look for signs of bottoming process. And assuming that the Bitcoin is a high correlation for risk on type of trades, whether it's NVIDIA or Palantir, right? They all have very similar price pattern, right? Kind of risk off. You can see Palantir is also actually positive today. So you can see some of these sell-offs are exhaustive, right? Where they build in the bottom. And maybe, that's why I put 2 is that, can we revisit this breakout? Right, the breakout in spiders is right around 610 level, right? And 620 is the liberation day, part 2, right? Liberation day, part 2. So would I be surprised if I see 620 in the next couple of weeks or 610? I would not, right? I think this, but we did have a decisive breakout. We stayed above this breakout for a couple of months. So I don't think we're going to reach 200-day moving average and 600, right? Scenario number 3. I mean, it's possible, right? Obviously, it's possible depending on the news, but more likely, assuming there is no bad news, we're trading in this scenario, right? Where 620 and 610 is possible. So that's why, even though I still have bullish positions, like I described Morgan Stanley, I have triple M position, but I did put QQQ hedge just in case we're going to revisit these lows, right? Which is, I think, completely possible, right? But it's not like somebody can tell you exactly where we're going to stop or where we're going to go next week, because that information, at least right now, is heavily dependent on macroeconomic data. But I would be concerned, just like majority of the people right now, because PPI was worse than expected. PCE data this Friday was worse than expected, and unemployment could tick up, right? I mean, a lot of people anticipated it for quite some time, and they were wrong, a lot of economists, but still, it was some area of concern. All right, any questions on the AGT, auto execute program? And I put the link here. You guys can sign up, and if you look interested in auto execute services or program, just click on this link, sign up now. Any other questions? So we went over dynamic power trader. We also have earnings power trader. This is, again, a very aggressive trading, right? Because usually it spreads, right? It's sometimes butterflies, sometimes iron counters, sometimes directional trades. Last week we did NVIDIA, right? We sold call spread, sold put spread, and that worked out well. This week, Broadcom, right? So most likely I'm going to do Broadcom, announces earnings on Thursday. So, basically I look at the different values, different models to make kind of, again, this idea, am I long the volatility or am I short volatility, right? Because there's a lot of premium in these options, right? If you go into the options data and you look at some of these premium, you can see there's a lot of premium in these options with an anticipation of the earnings, right? And if you think same thing, if you think it's scenario number 1 and 3 where we're going to have a beyond 1 standard deviation move, then you can do directional trades. If you think that the move is within 1 standard deviation, like we went through the sector, then you can sell premium, right? So that would be the setup for the earnings power trader. So stay tuned. On Thursday, I'll do the Broadcom trade. NVIDIA was the last week. And finally, Profit Accelerator. If you're more comfortable trading stocks, right? A lot of people, I would still look at the options data. Just because you don't trade options, that doesn't mean this is not a meaningful data for a stock trader, right? Because it is meaningful data, and you can see what other people think, right? One of the keys to being a successful trader is not kind of concentrating on what you think, but concentrating like on game theory, right? Going back to some of the psychology concept, the idea is what other people thinking, right? And that's usually positioning data or money flow information, from which asset class money are going, or where are people positioning, futures market and the options market. Again, some of the concepts, just to reiterate, the economy of control basically says that you can't really, going back to Feridun's comments, is that you don't know whether we're going to move 1 standard deviation to the right, to the left, and you can't, influence the unemployment data, but you do have a control over your own portfolio, over your own actions. That's why I encourage you right now to consider 4 positions at a time, not risk more than 2.5%, and be long and short the market at the same time, right? A lot of people says, Vlad, how can you be long and short the market at the same time? You either long or you short. You can't be both. Well, you could, right? If you options, you can buy a put and call, right? You can be long and short. If you're not comfortable trading options, well, you can be long strong stocks like Pelletier. If you look at the Pelletier, and if you liked Pelletier at 180, 150 sounds like a much better setup considering it's not making new lows. And you can say, okay, it doesn't look like we're going below 140, right? 140 will hold. Okay, so I have 17 points to the downside, but I have 30 points to the upside. Right, so then maybe that's the trade, right? So you buy the strong stocks, or maybe you short weaker stocks, right? Short weaker stocks. What's the one today? It was KHC, I think, right? Like KHC, right? So some of these stocks that you see they're weak, then you short them, right? Or you can just buy PSQ, right? If the market is going to sell off, PSQ is going to continue to rally, right? Inverse ETF. So you can buy PSQ and also, take advantage of the market volatility. Plus, it pays you dividend of 9%, right? So definitely another way to hedge your portfolio and also collect dividends while you're doing that. Any questions? All right, so I went over through the services. Let's see, we talked about the economy at control. We went positive, negative visualization. Again, you want to avoid trade on emotions, fight or flight response. Usually that happens when your drawdown is more than 20%. Right? I mean, everybody is different depending on how many years of experience you have, where you are in the journey as a trader, what's your risk tolerance level. But in general, if people are down more than 20%, 9 out of 10 people will panic and start, you're actually gonna have physiological responses, right? Your cortisol level might go up, your adrenaline might go up, right? Heart blood pressure goes up, right? You want to avoid that. The only way I found out how to avoid my blood pressure to go up is, again, look at that drawdown, number of position size. Talked about game theory. Remember compounding investment, right? 1%, 0.5%. In some of these trades, like what did I do? Let's see. Let's look at even short-term trading. Dynamic power trader. Let's look at the spiders, right? So you can look at these spiders trades. So on Friday, I sold for 32 cents. Look at spiders. Let's do last 7 days. Search. Again, this is synchronized with my broker-dealer accounts. These are real trades, not hypothetical trades. So on Friday, I sold the put spread, 648, 649 put spread, sold it for 30 cents, 31 cents. So the maximum loss is, dollar is the spread minus the premium, so 70 cents, right? So I'm risking 70 cents to make 30 cents, so close to 40, right? 50, 40% return on the risk taking. And you might say, Vlad, what's 30 cents, right? One contract, $30. But if you can do this trade every day, right, or even every week, right, those returns are compounded, right? And if you can make 40% on the risk taken every day or every other day, then you have this compounding investment. And now the idea is that I need to be right more than 2 out of 3 times, because if 2 times I make 60 cents or 65 cents, but 1 time I lose 70 cents, well, then I'm just spinning my wheels, right? So it's important to look at the position and be right more than 60%, more than 67% of the time, which, when you sell options on these, extreme levels, right? If it reaches 6,400, you sell put spread. If you sell, yesterday when it was at 6,500 last week, I sold the call spread. Right now, when it's at 6,400, I sold the put spread. Probability are in my favor, right? The question is it more than 70% of the time? And you can look at the performance of all of our trades, and you can see that what the historical returns were. All right, it's 12:45, and I covered most of the information. I covered the website, covered AGT, covered the auto execute program, went through trading psychology concepts. These are some of the stuff we cover in live trading room, your trading plan, cash is important. Drawdown, we went over that. Trade. Some of the other things to consider in trading, wait for 2 to 3 days. Obviously, short-term market is pulling back, so you need probably 3 positive days for the short-term trend to change, right? So I would be concerned with that. In terms of homework, in terms of books, right? I think to become successful trader, you need to read some of the books. This is probably my favorite book for trading, and not just for trading. This is Daniel Kahneman. He got Nobel Prize for this theory, and just something that's covered in every financial course, right? Financial engineering, right? The idea is that we have asymmetrical so he goes through this prospect theory. Right, the idea is there is asymmetrical relationship between the gains and losses. Right, when we make a decision, right? $100 gain looks different, feels different to Don and Bernard, right? Because they have different profile, they have different background, they manage a different amount of money, they have different years of experience. But even to the same person, right, to Vlad, $100 gain and $100 loss feels completely different, right? Our feeling toward losses is much greater toward gain. That's why you always hear this expression that, cut your losses short and let the winners ride, right? But we do the opposite, right? We let our winners short and we weigh in too long on our losing trade. Why? Well, that's prospect theory, right? If you read prospect theory, well-studied phenomenon. So, and then if you read the book, Thinking Fast, Thinking Slow, it gives you different tools of how to deal with this. I mean, one of them I went through, the most important is position sizing, right? Figure out the right position size, give yourself more room, more space to make a trading decision, and that helps you to deal with the market volatility. And we also have a lot of webinars that they're free. I encourage you to, you can register, right? This doesn't require any financial commitment, right? You can create an account, register, you'll get our videos, right? Every week I publish a video on the market conditions. That's Wednesday and Tuesday. Sunday, there's a blog, right? So you can actually see a blog with trade of the week, right? Trade of the week, but also different topics, my personal life, try to make it interesting. So Power Trading gets published every Sunday. And you can watch different topics on trading psychology and how to build call spreads and different other topics. All right, any questions so far? What condition would cause to enter PSQ? Well, I think if the longer QQQ stays below 50-day moving average. Right now the market is oversold, so maybe I would wait. But Thursday and Friday, if you see VIX is above 20 and we are at least taking out the August lows, then I would consider buying PSQ, because that means that we're opening the door to 540 and maybe even 520. Right. So I think this week I would look at the reaction toward the ADP data. Right. You have ADP data on. Some people still think that now ADP is going to be more important. I don't know. Usually it's not, but maybe because of the revisions that happened in the past. ADP employment could be even bigger, right? So ADP employment on Thursday and on Friday, the unemployment rate, right? If you see sudden jump, maybe it's 4.5, maybe it's 4.6, then the market could sell off. Obviously, that would be a signal. But if you don't know and you have too much exposure, right, a lot of long position, I already put on QQQ put spread. Right, I already put on QQQ put spread because I don't know and I want to hedge. Thank you for the question. Anyone else? Bernard, Dan, Don, Edward, Feridun, George, Harry, Dr. Simon, Paul, Wanda. All right, guys, you were wonderful. Thank you very much. Same time, same place, next Tuesday at 12 o'clock Central, 1 o'clock Eastern. We're going to have the employment data. We'll see if that QQQ put spread actually worked out or not. I hope to see you there next Tuesday. Again, as a homework, you have prospect theory, right? Thinking fast, thinking slow, book to read. You can try any of our services, or at least register, right? Go to Yellow Tunnel, click on sign in, and create an account so you get free information. And then you can sign up for any of the paid services if you're interested in helping trade, or you want Keith and I to help you with in live trading room environment. You can sign up for paid services, and then if you type in Yellow Tunnel AGT, right? If you're looking for a broker dealer, they give you special rates, special membership pricing. So hopefully you can take advantage of that as well. Thank you very much and have a great day. Doom, thank you. I appreciate this. Everybody who's new, Paul, Harry, George, Edward, Dan, Bernard, thank you for participation. I hope to see you 12 o'clock next week. Thank you.